If you own XRP or you're thinking about buying it, the next few minutes might change how you look at this month completely. Welcome to XRP Financial Horizon, and today we're breaking down why XRP just made one of its biggest moves in months, and several developments suggest the rally could have further room if momentum continues. In the first 3 trading days of July, XRP jumped from around $1.03 to nearly $1.18. That's a gain of more than 13% in under 72 hours, which is not something that happens randomly. When an asset moves this fast, there's usually a combination of factors working together, and today we're going to walk through each one so you understand exactly what's fueling this. This wasn't an isolated XRP event either. The wider crypto market picked up steam at the same time. Total market capitalization rose close to 1%, landing around $2.18 trillion. Bitcoin pushed back above $62,000, and Ethereum climbed past $1,700. So part of what we're seeing is a broader shift in sentiment, with money flowing back into digital assets across the board rather than just one coin catching a lucky break. One of the more unexpected drivers behind this rally actually came from the job market. The US added only 57,000 jobs in June, well below the 110,000 economists were expecting. Normally that would sound like a warning sign, but markets read it differently. Weaker job numbers increase the odds that the Federal Reserve eases interest rates sooner, and lower rates tend to push investors toward riskier assets like crypto. So in a strange way, a disappointing report ended up working in XRP's favor. There's also a chart pattern circulating online that's caught a lot of attention. Analyst ChartNerd, known on X as @ChartNerdTA, pointed to an 8.5-year cup and handle formation building on XRP's long-term chart. This kind of setup, when it plays out, often signals that a slow accumulation phase is finishing, and a larger move could be next. Some analysts have outlined long-term extension targets of $8, $13, and $27 if the pattern fully plays out. Big numbers, sure, but worth knowing the technical case even if you take it with a healthy dose of skepticism. Now let's get into the part that's arguably driving the most real fundamental change: regulation. The Clarity Act has been moving through the US Senate, and this bill could directly affect how digital assets like XRP are classified under federal law. For a coin that spent years caught in legal limbo, any real progress here matters far more than a single chart pattern ever could. Investors reacted specifically to the possibility that XRP could be treated as a digital commodity under a joint SEC and CFTC framework. That distinction matters because commodities are regulated very differently than securities, and a clearer legal status tends to open the door for bigger institutional players who've been sitting on the sidelines waiting for exactly this kind of clarity. Adding a bit more intrigue to the story, Ripple co-founder Chris Larsen has a financial stake in a company called American Perpetuals Exchange Corporation, which has ties to the son of Senator Kirsten Gillibrand. Whether or not this connection influences any future legislation directly, it's added another layer of attention to XRP's regulatory narrative. And it's the kind of detail that keeps analysts talking. Let's talk about where the money is actually going because inflow data tells its own story. XRP-linked investment products brought in $6.55 million in a single day as of $5.5 million in a single day as of July 2nd. Add that to previous inflows, and you get a cumulative total of $1.49 billion, with net assets under management sitting just under $988 million. That's real capital choosing to stay parked in XRP exposure, not just short-term speculation. XRP wasn't the only one seeing renewed interest. Spot Bitcoin ETFs snapped a 10-day losing streak, pulling in $221.72 million in net inflows on July 2nd alone. That pushed their all-time cumulative total past $51 billion. Ethereum ETFs added another $29 million that same day. Put simply, institutional money appears to be stepping back into crypto across multiple assets at once, and XRP is riding that same wave. Here's a detail that long-term XRP holders love to bring up every year around this time. According to data from CryptoRank, XRP has posted gains in July for 7 straight years, averaging a 10.4% return since 2013. Back in July 2020, XRP actually jumped more than 48% in a single month. Nobody can promise history repeats itself, but seasonal patterns like this are exactly why traders keep a close eye on the calendar, not just the charts. Now let's look at what the technical indicators are actually saying right now. On the 4-hour chart, XRP is trading around $1.1714, and the RSI is sitting at 79.91. That's firmly in overbought territory, meaning the price has moved up quickly and could pause or pull back before its next real move. It's not a red flag on its own, but it's worth watching closely if you're trading short term. At the same time, the Chaikin money flow indicator is reading 0.21, which tells a slightly different story. That number suggests buyers are still active and accumulation hasn't slowed down, even with the price already elevated. So you've got two signals pulling in different directions. One saying, "This moved fast, be careful," and the other saying, "Buyers aren't done yet." That tension is exactly what makes the next few days interesting to watch. If you're tracking levels, resistance sits around $1.20. A clean break above that could open the path toward $1.25. On the downside, if price slips below $1.15, the next support zone to watch is closer to $1.10. Those two levels will likely decide whether this rally keeps building momentum or takes a short breather before its next move. So here's where things stand. Current market data suggests XRP is benefiting from a mix of real regulatory progress, strong ETF demand, a historically favorable month, and a market-wide rebound all lining up together. None of these factors alone would explain a move this size, but combined, they paint a pretty clear picture of why traders are paying attention again. Keep watching those key levels, do your own research before making any moves, and if you want to stay ahead of what happens next, make sure you're subscribed, because this story is far from finished.